Exciting times lay ahead for silver's price if the latest reports are true. And we're going to talk about what those are in this video as we explore. And I'm talking about $32.50, according to some analysts who feel that silver's price could reach that level. But right now, silver hangs in the balance. Indeed it does. It could go either way, but the likelihood that it's going to go a certain direction is much greater now. In fact, when I saw this, I was actually a little bit shocked. There is some forecasting that is being set into place based off of what the Federal Reserve is going to do. Will they go big or will they go small? Silver is set to test $32.52 if the Fed does indeed go big. Now, I've been one of those that for the longest time have felt that they would only cut by a quarter point. Now, most people think they're going to do it above a quarter point. They're going to cut a half a point. So what's happening here? Well, silver prices have been surging. In fact, we did see it reach over $31 earlier in the day. In fact, moments before the markets close, silver is not doing quite as well as gold is. There is some consolidation in the silver price, but gold is up 0.18%, up $4.70 today. It did reach a high of $2,590.10. That's $9.90 away from that $2,600 psychological level. Still trading at an all-time high. Silver reached $31.16 earlier in the day, but it is now only up 3 cents to be trading at $30.82. Anything above 30 for a long enough time, I think, is a good reason to celebrate. But 32 is a psychological number too. We've not seen that since about 2016. It was a brief period of time when that had occurred. So if we start to see it, especially if we are finding out what the Federal Reserve is going to do, and with the meeting that's coming up very soon this week, and they have been surging, breaking above the $30.19 per ounce mark and confirming a bullish trend on the weekly charts. The rally brought key levels of $31.76 and $32.52 into focus. And this is from FX Empire. Optimism that U.S. Federal Reserve is preparing to cut interest rates coupled with a weaker U.S. dollar and strong gold inflows. That's right. There's a lot of central bank buying of gold. You've been hearing me talk about that recently, about gold coming into play, and silver will follow. Although I think there's other factors that are leading to silver's move in this direction as well too, such as the dollar's weakness. One of the key drivers for silver's rise was the U.S. dollar's continued decline, which at its lowest level of the year against the yen. A weaker dollar typically boosts silver by making it cheaper for holders of other currencies. It becomes one of those things that, you look at, if they're going to be cutting interest rates, we might as well just invest in other assets that aren't necessarily paying a dividend, but are a good hedge. It makes it that much more attractive. What is the dollar index doing right now? It is now down 0.33 to 100.69. 100.69 is the 100 level, is a pretty big psychological mark here. And if we see them cut rates a half a point, well, we could see it fall below 100, and that would be very bullish for the precious metals. Additionally, global-backed exchange-traded funds saw continued inflows as well, with SPDR Gold Trust reaching its highest level since January. This increased demand for gold also lifted silver prices, as the two metals often trade in tandem. Well, that's not necessarily true. If it were true, the ratio would not be as wide as it is now. They do trade in tandem, but it's at 84 to 1. But they do trade enough outside of each other, and typically what happens, gold goes up, silver goes up much more. Gold goes down, the silver goes down much more. Although when gold goes up, silver doesn't go up as much. And this is what has led for long enough that it's led to this point now where we're seeing the ratio widen and keep widening. So in some cases, they're trading either independently or not in lockstep with each other. They may be in tandem, but one is outpacing the other. And right now, because of the ratio being so high, that is why we're seeing that ratio widen out. Because of the increase in gold's price and silver maybe not following. Like today is a perfect example of the difference between the two. Gold is up and silver is up less than gold today, widening the ratio. Now, these economic reports that we're talking about, which is happening here with the dollar weakness, is just one thing, but there's other things that are leading for the dollar's weakness, and that is the economic outlook. Several key U.S. economic reports released last week supported expectations for a Fed rate cut. The Consumer Price Index for August showed a 0.2% rise month over month, which aligned with forecasts, while core inflation edged higher by 0.3%. The Producer Price Index also came in at 0.2%, reflecting easing inflation pressures. Additionally, jobless claims data showed a stable labor market with no alarming signs of weakness. But we know that they underreported 818,000 jobs, and I'm not sure if that number's been revised up more, but still, that is concerning. And there's a lot of things going on. UPS, I think, laid off 50,000 workers. We talked about the Stillwater mine up in Montana. That's going to be a couple thousand workers, I think, as well, if that does occur. But the Fed Watch tool now, this article is reporting numbers that are now old enough now. They are increasingly now. 63% of the participants that take part in this survey for the Fed now say that there's going to be a half-point cut. 63%. Only 37% now believe it's going to be a quarter-point cut. And that is exciting the precious metal markets, both gold and silver. Now, today, the increases are not all that dramatic, but I think what we saw on Friday is leading up to it, and this is one of those things where we're starting to see the late baking in of these prices. But as this does occur and the fallout from it, I think it's going to lead to potentially silver climbing. By the end of the week, silver had posted strong gains last week, and up over $30.72, up nearly 10%. Falling Treasury yields, the dollar's weakness, and growing expectations of Fed easing kept silver prices elevated. With inflation pressures easing and central banks leaning towards rate cuts, silver's bullish outlook remains intact, especially considering the ECB, European Central Bank, I think, has already started cutting, and other central banks as well have cut, and some by 0.5 percentage point. So will silver test the yearly high of $32.52? Silver's performance will be closely tied to the Fed's rate decision. A larger than expected 50 basis point cut would push silver above $31.76. In fact, it's already above that now, with the potential to test $32.52, which was the previous high. So we could see that again here, and that has not happened since 2016 before it happened this year, which is where it was before. If the Fed opts for a 25 basis point cut, prices may consolidate around $30.19 or decline sharply, and I think they'll decline sharply if that occurs. I may talk about that in a different video. With key economic data now out, the Fed's decision this week will likely be the primary driver of silver's next move. So it really does depend on the Fed, and it just goes to show you what the Fed does will literally manipulate the markets. It'll manipulate the dollar, and by extension, silver's price will be manipulated as well. So bear that out, keep that in mind, and understand that if we get a disappointing quarter point cut, well, all bets are off the table here. And we have to think about each possibility that could occur here, because this, folks, is the big pivot that's been talked about for literally a couple of years now. And the Fed is going to pivot. This is the pivot. And we are seeing the representation of that with silver's and gold's price. And I tell you what, if this doesn't give you confidence in stacking precious metals, I don't know what will. Why? Well, because look at what they're doing. Look at how they're reacting. Right now, all the price movements we're seeing in the last week are solely based off of what the Fed is or is not going to do. Now, gold's price is being propped up by central bank gold buying, but not in terms of its movement from its baseline. This is all market indicators, nothing more, nothing less. And fascinating to see this occur and to move in this direction, and we'll keep an eye on it and keep track of it. It's what we do here in this channel. I like to bring you the latest news in the world of precious metals, but we could very well see silver push right through that $32 mark if this actually does happen. And really what's going to really seal the deal for silver is going to be what the notes say and what Chairman Jerome Powell says about this. It could either stifle or enhance the pricing that we're seeing with silver through this. Because if there's any signs of economic, I think really either way, if the economy is looking good, according to Jerome Powell, and the markets feel that that is the case, that means there's going to be more demand for silver down the line because consumers will be spending money again. And we know that they've started easing. We know that legislation like the Green New Deal, which is disguised under the Inflation Act, is still has yet to be implemented in full. And a lot of that is green energy stuff, and that's going to require some silver as well too. EVs are still here, and even though they're, some of the demand has subsided from some applications for it, they're going to continue to push that technology no matter what. And for EVs and PVs, photovoltaics is another area that continues to see growth, and likely will see growth in and through next year. So very interesting indeed. Let me know what your thoughts are in the comment section below. Hope you found this video informative, insightful, and educational. We'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch. And I want to encourage you to please rate, share, comment, and subscribe.